He makes zero noise. He courts no attention. And by the time anyone notices, he's quietly pocketed $100 billion, half the nation's wealth. What ghost code did Warren Buffett unlock? What dark game is he playing behind the shadows? Is he Wall Street's most cunning thief, stealing fortunes while the market scrambles in the dark? Warren Edward Buffett was born in Omaha, Nebraska on August 30th, 1930. At the time, the United States was in turmoil. Banks were failing. Families were losing their homes. It was an age when the very idea of investing sounded reckless. Buffett's father, Howard, lost his job as a stockbroker. He scraped together enough to open a small brokerage firm in the back of a borrowed office. In that space, surrounded by ledgers and the muffled voices of worried investors, Warren's education began. Most children remember their early years by the toys they played with. Buffett remembers his by the ticker tape machine rattling out prices. He could barely read when he first began studying stock tables. He was fascinated by the idea that behind every number was a real company, making things, serving people. At 6, Warren bought 6 packs of Coca-Cola from his grandfather's grocery store and sold them door to door for a profit. At 11, he made his first formal investment, 3 shares of Cities Service Preferred. When the stock dropped by nearly a third, he felt the sting of fear for the first time. Other kids his age were worried about baseball cards. Buffett was grappling with the psychology of panic selling. When City Service finally recovered, he sold, relieved, only to watch the stock soar higher and higher after he was out. He later said, "The lesson? Don't be swayed by the crowd. Your temperament matters more than your IQ." While most teenagers experimented with rebellion, Buffett experimented with businesses. He delivered newspapers for both the Omaha World-Herald and the Washington Post. He filed taxes at 14. By 16, he'd saved the equivalent of today's $90,000. He bought a used pinball machine for $25, placed it in a barber shop, and quickly turned it into a small network of machines. Even then, he understood leverage, how to make money while you slept. After high school, he applied to Harvard Business School and was rejected.
Wait. Are you serious right now? You're telling me a guy built $100 billion by, what, selling Coca-Cola door to door and throwing newspapers in the morning? Come on.
That's exactly what most people think. They hear the first chapter and they laugh. They roll their eyes. But that's why almost no one becomes Warren Buffett. You see, the surprising part of Warren Buffett's story, it hasn't even started yet. Hopefully, Buffett applied to Columbia Business School, where Benjamin Graham was teaching. Graham's book, The Intelligent Investor, was already Buffett's Bible. Graham preached an idea the market still struggles to accept. Price is what you pay. Value is what you get. If you can buy something worth $1 for 50 cents, you should, regardless of the market's opinion. Buffett was enthralled. He absorbed everything Graham could teach him. After graduation, he worked briefly for Graham Newman Corporation in New York. But Omaha called him home. He wanted independence. He wanted to invest his own way. So, in 1956, in a borrowed office, he launched Buffett Associates. The seed capital, $105,000 from friends and family. That first partnership grew, quietly and relentlessly, as he applied Graham's ideas, then adapted them. Buffett began searching for cigar butts, companies so cheap you could pick them up, take a final puff of profit, and discard them. He scoured financial statements late into the night, hunting bargains no one else wanted. By 1962, he had built the partnership's assets to $7 million. Then he found Berkshire Hathaway, a failing textile mill in Massachusetts. At first glance, it was the ultimate cigar butt. Undervalued assets, cheap stock, no future. Most investors wouldn't touch it. Buffett saw something different, a platform for reinvestment, a permanent capital vehicle. He began buying shares, eventually taking control. And then, like a patient chess master, he began transforming the company from within. Insurance businesses were the key. They generated what Buffett called float, money held temporarily while claims were processed. Float could be invested, and over decades, float compounded Berkshire's capital base into tens of billions of dollars. It was a strategy almost invisible to outsiders. While others chased glamour stocks and quarterly gains, Buffett was patient. His moves were so quiet that Wall Street didn't notice until Berkshire was worth more than most banks. By the late 1970s, he was already wealthy, but his ambitions were never about money alone. He wanted proof that rational, disciplined investing could outlast speculation. He started buying shares of the Washington Post, Geico, Coca-Cola. Each was chosen not because it was popular, but because it generated reliable earnings and could be bought at a fair or unfairly low price. Buffett once said, "I am a better investor because I am a businessman, and a better businessman because I am an investor." During the tech bubble of the late 1990s, Buffett was ridiculed for avoiding internet stocks. He was called out of touch, too cautious, a dinosaur. But he didn't flinch. When the bubble burst, Berkshire emerged stronger, flush with cash and ready to buy. Over time, people realized the scale of what he'd built. By the time most investors paid attention, Buffett had amassed positions worth over $100 billion. It wasn't luck. It was the ghost code. Buy only what you understand. Buy when it's cheap. Hold it longer than anyone else dares. Buffett's personal habits reinforced the same philosophy. He lived in the same Omaha house he bought in 1958. He drove himself to work. He read hours every day, searching for what the market had overlooked. When asked how to get smarter, he simply said, "Read 500 pages every week." That's how knowledge builds up, like compound interest. Today, he's given away more than half his fortune. He's inspired thousands of investors to think differently. And yet, he still prefers to stay quiet, to avoid the spotlight, to act when others are distracted. In an age obsessed with noise and instant fame, Buffett's story feels almost impossible. But maybe that's the real lesson. True wealth doesn't shout. It doesn't rush. It doesn't crave attention. If you've ever wondered whether you could do the same, ask yourself, would you have held on to city service at 11 years old when everyone else was selling? Would you have passed on the internet boom when it seemed unstoppable? Would you have stayed silent while the world demanded action? The gauche code of Buffett isn't complicated. It's simply this: be patient, be rational, be willing to look foolish, and trust that value will reveal itself in time. Thanks for watching. If you'd like to keep exploring the hidden stories of history's greatest investors, subscribe to Butterfly. Stay curious, stay skeptical. And remember, sometimes the loudest returns belong to the quietest minds.